Okay, so real quick before starting the actual video of the Q&A, I just need to apologize for the terrible video quality. I didn't realize I was recording in what looks like 720p if not lower, but it's still good enough to be seen. So I did my best when it came to upscaling it, but I could only do so much with it. And another thing too is if it sounds like I'm whispering to myself, it's because I was reading the chats, and so I was reading them as they were coming in, so I tend to whisper more than I do speak a little louder. So just wanted to clear that up. But other than that, pay close attention because the stuff that I talked about was really good, and the questions were really great too. So with that being said, let's begin the video. For anyone watching this video down the line, just know that any quote-unquote advice is not financial advice. I am not a financial advisor. Anything I say should not be taken as financial advice. This is just my recommendations on what I would do if I was in your guys' shoes. Alright, so with that being said, let's begin. So, Mr. Grievous, do you have anything that y'all want to go over? Any questions? Whatever you got? I'll go over it with you right now. I don't know. Hold on. Okay, there it is. I was wondering why that wasn't showing up. Yeah, so if you got any questions, let me know, man. I do have some Q&As that I could go over too as well after this. So who knows? Okay. All right. So let me see. Let me find them first. Okay. So one of the questions was okay, so it's about pair characteristics. It says each pair has unique tendencies. How do you find the right pair for your style, and how do you identify swing highs / lows for a specific pair? I think this is more like a multiple questions in a question. So it's just, how do you find the right pair for your style? I mean, honestly, it's all done through back testing. I mean, if you're a swing trader, that's something you have to back test. If you're a scalper, you got to back test that as well. I mean, there's just some pairs might fit better for scalping, like if you're a forex trader, maybe GBP USD, Euro USD. I mean, when it comes to trading futures, I mean, literally almost anything can work well, intraday trading and scalping. But you would still have to backtest this. I don't know. You can't really swing trade trading futures like that. So, and if you do, I think if I'm not mistaken, you have to close your position before the closing bell. So that's one thing. And then, how do you identify swing highs and swing lows for specific pairs? So when it comes to identifying swing highs and swing lows, it's really subjective on how you determine which one is a swing high to you and what is a swing high to someone else. So on this chart, right, I'm using BNB USDT, right? So this is just an example here. When it comes to just looking for regular swing points, I would say this would be one, right? For some people, this could be one. Right? For some people, this could be another one. For some people, this could be another one. Now, let me put it like this. Some people will say, okay, so this is my low, this is my high, this is my low, and this is my high. And then this is my low. Okay, cool. Some people might say, okay, you know what? This is my low, this is my high, and then this is my low. Right? Some people might not count this. Some people might say, okay, this right here is going to be my high, right? Connecting from here to here to here. So it's really subjective, right? The only way to know for sure if you're marking up your charts correctly is if you're back testing. So when you're back testing, make sure you're marking up your charts, and then at the same time, obviously log your trades. And if you're noticing that maybe you shouldn't be marking your swing points or swing highs and swing lows on certain areas, and you see, okay, when I mark them up, I seem to not be doing very well, this, that, and the other, then you can kind of tell if you have a problem marking up your swing points. But I mean, the truth is, it's not really that difficult. It's really hard to mess up marking up swing points. It's really hard to mess that up, because even if you did just choose this one, I mean, it's not a big deal, because if your trading strategy relies on, like, let's say sweeps of liquidity, and you're entering at any moment that you see something like that, then that just means that this right here, right? So once you see this sweep right here, you can say, okay, I see a sweep of a high, I'm gonna enter when like a fair value gap gets inverted, right? And if that's part of your trading setup, okay, cool, you have a setup right here, right? So let me see. So you have a setup here, price inverts it. Great, now you enter off of that setup. Or let's just say you didn't mark this part as a swing area and you wanted to mark up this side, right? But you're still trading liquidity sweeps and inverted fair value gaps. Well, all that means now is that you missed a trading opportunity, and now you still gotta wait for another point in time where you find a sweep of a low or of a high, and then that inversion to enter for a trade, right? So it's not anything crazy when it comes to marking up your charts. I wouldn't get too lost into it, and if you have a really hard time marking them up, I think you can use okay, yeah, so you can use an indicator like this, right? So these also help you find those swing points, right? But notice how when you change the points here, notice how it marks up something else. So that's what I mean, right? But either way, you can trade off of any of these points. It doesn't matter. If you want, just keep it labeled from type 1 structure and type 2 structure, which if you've seen my market structure videos, you'll know that type 1 structure is basically internal structure, or the smaller structure, whether it's on a higher or on a lower time. It's just the structure in between it. You'll know which one is your internal and your external. And you know what, since I'm feeling gracious, I might as well just show you real quick. So like this right here, from here to here, from here, and then once a low gets formed, I would mark that up. But it's essentially finding the highest and lowest points, and then from there you're just marking up everything in between. So like this, right? So this would be your type 2 structure. So yeah, so see, type 2 internal, type 1 the external, right? The big stuff. So that would be the easiest way to label it if I was in your shoes. All right, so let's see, the next question was, can you explain why Euro USD is considered to have good structure? Is it possible to trade pairs with poor structure? So let me see here. Hey Gervais, you don't have any other questions before I dive into this one, or do you want me to continue? Okay, so as you can see on Euro USD, you can tell pretty obviously if you're going on a higher time frame, it's got a fairly clear path most of the time, as opposed to what I just showed you right from BNB. That's why I would say Euro USD is pretty good. And when it comes to trading most concepts like SMC, ICT, or supply and demand or whatever, it does pretty well, right? It does pretty well. Just by looking at it, you can tell there's already some good supply and demand setups, some good ICT setups, whatever, right? So that's why I say that Euro USD is usually one of the best to trade, aside from like GBP USD. Let's see. Now, when it comes to trading pairs with poor structure, look, it's not impossible. It's not impossible, but it's just not optimal, right? Anything's possible when it comes to trading. It's just what is probable and what is optimal are very, very important things. So let me go back to BNB. And I mean, looking at this, I wouldn't really want to trade this. I mean, it just looks terrible. You'd have to definitely use a higher time frame for sure. And scalping would not be the most ideal thing. Maybe if you're like on like a seconds time frame, sure. But some people don't have the luxury of using the seconds time frame or the time. So no, I don't recommend this trading something like this, because poor structure generally means consolidation. That's really what it generally means, it's consolidation. So no, I don't recommend trading in consolidation. If you are, maybe some support and resistance might work, but even then, that's still not very optimal. So just follow the trend, trade with the trend, trade with something that gives you trend direction, and don't trade anything that just is not tradable, bro, because there's no point. Why do people like making trading so hard for themselves? It's something I never understood. They want to trade in the worst possible conditions. For what reason? I just don't understand that. That's ridiculous. Not saying that I'm trying to dig on the person that asked me this question, but I'm just wondering why. Let's see. Oh, okay, I think I fixed that. Okay, so candle anatomy. Why is it important to understand candle anatomy? How does reading candles contribute to better trading decisions? Oh, okay, that's actually a really good question. So the reason why is it very important to read candles, as a matter of fact, I'll use this example. So for instance, having candles with less wicks means, or less big wicks means less trading indecision. So reason being is because I want you to look at it as like a tug of war, right? So let me zoom into this candle. As you can see, people are constantly buying and selling in this candle. They're buying. selling, 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 and this is a huge tug of war. Huge tug of war. And so price is clearly very indecisive, obviously. Let me see if I can like zoom in. Let me go down here. Price is going down, then it's going up, then down. So the last thing you want is to trade in an area that you don't know if it's a good idea to trade in. Like for instance, some people might have entered off of an area from here because they thought price for sure was going to go down, and the worst part is that it didn't. Stops them out, right? And then maybe someone set a limit order down here and a rejection block. Well, price just broke through it and took them out. So that's already two losses in one, right? And that is why I would much rather wait for nice solid candles, big solid candles. Doesn't have to be incredibly big, but just something that says I'm clearly going to switch direction and I'm going to go in favor of your analysis. So like a candle like this engulfing, like not engulfing, but pretty big bullish candle right here, this orange one, very small wick, and it's like a car did a U-turn, right? So it's like the car is going down, right? It's going down one path in a lane, and then all of a sudden it does a quick U-turn and then it's going up, right? And for me, when I see something like this, and if I see that it is in an area of a point of interest of mine, or if it's like a trading strategy that I'm doing, like I'm trading liquidity sweeps, and I see something like this, a sweep like this, and it's near a really important area of maybe demand or a very important swing point, like right here in this candle. So here, so as you can see, swept liquidity, touched into that order block, and then what do we see here? We see that big U-turn in price, really big U-turn. So obviously all I need is that. For me, that's like, okay, I see this big U-turn, stop loss under this candle because it's freaking huge. I don't need to go any further. And then maybe I want to go for like this area right here. And then what do we have? We have TP, right? And that's 1 to 448. That's already good money right there. So for me, when I read candles and say, okay, man, a lot of these candles have big wicks, or they're pretty small, or even if they're really big with big wicks, I still try not to enter off of them, because sometimes that means that price is already exhausting and it's giving signs and saying, okay, I'm trying to go down, and so at any moment any of these candles could be the one that'll go down. Like as you see here, they're big candles, right? But because they have big wicks on the top, that's like saying, hey, I'm trying to go down, I'm trying to push down, I'm trying to push down. So for me, that's like saying, okay, I gotta wait. I'm already I'm trading with the trend. I'm bullish, right? Whatever. And price is already telling me that it's trying to create some kind of pullback by seeing these big wicks. Therefore, I'm just gonna wait. I'm just gonna wait a little bit, see if I can get into a better time or a better point in price. So that's why I recommend looking at candles, so that way you can tell if it's a good time to enter. Okay, so that's why it's very, very important. Grievous, any questions? Or Grievous? Sorry if I'm mispronouncing it. Yeah, regarding liquidity, could you go through how we spot liquidity pools? Yeah, no problem. Hey, let me know if my live pauses on you as well, because for some reason sometimes it says it's pausing. I don't know why. So you should move pause to, oh, the preview. Okay, that's why. Okay, my bad. Yeah, just let me know if for some reason it cuts off. But yeah, so regarding liquidity, could you go through how we spot liquidity pools? Okay, so most of the times liquidity pools are just highs or fractal highs as well. It can be any high that hasn't gotten swept. So okay, so let me turn this on. So all these fractals, these are technically also considered liquidity. So what I want you to look at is this. Some liquidity pools or some areas of liquidity are constantly being swept and some are not. So the best way to know if there's an area of liquidity that still needs to be swept is you just drag a line from any of these fractal areas and see if price already hit it. Like here, price already hit that, right? And then here, price has not hit it yet. So I can drag this all the way out, and as long as price does not tap into it, that means that it's still good. It's still ready to get taken out. This right here already got taken out, right? Let's see. This right here still needs to get taken out. Now you might be wondering, okay, well, how do I go by selecting the right liquidity pools, right? So which ones
the best one to trade. The best way to do it is to pair it up with some kind of point of interest. It could be an order block, it could be an area where it's in an area of discount. Like if you get your Fibonacci tool and let's say you were to do it from, I don't know, like from here to here, right? Right, so if you find some liquidity under the 50% and you're trading with the trend, which would be like bullish, I guess, for this example, you would want to look for areas of liquidity under the 50%, right? That's the easiest way to do it. Or like I showed earlier, you could look for areas that haven't been swept like this that are near an order block. So that's another way, right? So just find for areas that haven't been swept and see if you can find them near a point of interest. Another way too, I think, and this works with any direction of the trend, is using like a like chart patterns, but the specific chart patterns that I'm looking for is like this. So if you see this and you start trading like this, the moment you start marking up liquidity pools like this, and I'm gonna color code it too, you don't want that. Okay, this, like, that means this shows that price is already being swept, liquidity is being swept. So anytime you can find a chart pattern like this on the chart, that means it's probably already being swept. Let me see, this and that, there you go. Okay, yeah, so notice how right here it's like this, right? It's going up, and look, it's already being swept. If I were to drag out this right here, what's that showing me? It's showing me that price is being swept, and liquidity is always being swept on any time frame. So here, that's swept, that's swept, same thing here, like this, right? Notice this one in the bottom, and look what it's doing. Price is being swept, being swept, being swept, being swept, right? So the moment you start seeing a chart pattern like this, that means liquidity is being swept. But when you see one like this going down and up like that, that's liquidity that still needs to get swept, right? So let me show you like this. Bam, perfect, right? So if I were to go back here, liquidity that needs to get swept, right? Because if I were to drag this out like that, look at that. And if I were to do this, that's also liquidity that needs to get swept. And this one right here, right, that needs to get swept. So that's also another way. So just as long as these highs or any high at any moment isn't getting swept, that is one way to identify liquidity. And then if you want high probability liquidity pools, then just look for one near an order block or a fair value gap, stuff like that. It just makes it a little easier. Do you have any more questions on that or anything else? I think my thing's not loading the messages right. I got that part. Regarding fib, what fib areas do you use in your trading? Like, what fib levels do I use in my trading? Oh, okay, so it just depends. I mean, just so you know, some fib levels work best in certain pairs and in certain time frames. It just depends what pair or what asset you're trading, how much you've back tested it, seeing how well price reacts on the specific fib level. I mean, I'm being completely honest, I think fib levels aren't necessarily anything magical. I think they're useful, but not in the sense that price will always gravitate to those levels. I think it's more useful to say I have a predetermined level of where I want price to be in order to get in where I think is optimal, right? So just because a fib has an interesting number, I would say, like, we all know these common ones, right? 0.5, the 0.38, 0.618, 0.786, all that stuff, right? But I mean, to be honest, I could draw a line anywhere and price at some point in the future will tap into it, right? It doesn't have to be a Fibonacci level, it can be any level. So that's one thing that I want to clear up. But the other thing too, I would recommend to backtest, to be honest. If you're planning on using fib levels, just backtest them. The only time I would say they're really useful is during using Elliott wave, and I have an Elliott wave series if you want to try that. For my swing trading strategy, I figured out, hold on, give me a quick second, my bad. I figured out that using the 0.75, and by the way, I will be making a scalping strategy with the fib. Just give me some time so I can backtest it a little more. But yeah, I've noticed that the 0.75 is really freaking good for swing trading. So as you can see, it gets in at really optimal times. I like it because I get a great entry, and I've already back tested this and it's just really good. I already like made all the pairs that it works with. I don't really trade it with crypto that much, but I mean, I think it works pretty well depending on how you're trading it. But yeah, like first it's here, price taps into it here, right? Stop loss under here, and then take profit up here. As my first take profit, and it's already a fixed take profit. No matter how I move my fib, it's a fixed entry and a fixed take profit, and then my second take profit is up here. And as you can see, TP was hit. So that is how I use fibs. I wouldn't say anything, because I wouldn't say anything about them is magical. It just depends on how you use them. But like I said, just back test it. It's probably the best way to figure out what fib works best and for what asset and for what time frame. And yeah, it's like just like those little nuances just to keep in mind. Anything else? Do you use fundamentals at all in your trading, or only technical analysis? Well, hold on, before I answer that, do you have any questions regarding the fib part? I don't want to move on unless you're like totally sure on what I expanded on. No, I got that part things. Okay, so when it comes to fundamentals, okay, so do you use fundamentals at all in your trading or only technical analysis? So the only time I would actually use fundamentals is when I'm doing like a weekly market outlook. But the only reason why I use them is because I'm like not super sure of the direction, or I just want to give people a little bit more information. But when it comes to like my daily, like for like a daily bias or for scalping, I don't use fundamentals, if I'm being completely honest with you. If I'm not sure about the day, I would just skip it. Like I would just skip the asset and just trade something else. But I don't really like using fundamentals because it's just too much work, to be completely honest with you. And sure, it might give a slight edge for like the weekly outlooks, but I don't need them. That's only something I've been doing more recently, just for the for the channel. But no, I don't really use fundamentals, to be honest with you. I don't find them useful like that. Some people do. Some people like to trade with fundamentals. I've just personally have seen both sides of the coin, where people trade with fundamentals and let's just say they get like a 40% win rate and their RR is like above 2R, right? But then I've also seen people that don't trade with fundamentals, like SMC Gel is one of those people, and he's a scalper and he makes great money without them. And so, you know, for me, it's not a big deal. It's not a big deal. I don't really recommend people to get into it if they don't want to. But if you do, and that makes you feel more comfortable, makes you feel like you have a slighter edge, or I don't know, just does something to your psychology to make you feel better, then go ahead. But no, I don't really trade with fundamentals. So no. What are preferred confluences you like to see before taking a trade? So I actually have a video on confluences. I'll tell you my preferred in a second, but let me find the video because I think it's very important that I share it. So that's one video that I use for that. I think it's entry methods. Yeah, I think entry methods. If it's not that one, then it's probably entry models, but I'm pretty sure it's that one. But when it comes to like my preferred, it just depends what I'm trading that day, what strategy I'm trading. So sometimes I'll use limit orders, and sometimes I'll use engulfing candlesticks. So for instance, let's just say you're trading order blocks or supply and demand. You see something like this. Okay. So price taps into it, and what I want to see is just anything in the candles that says U-turn, right? Hard U-turn, I'm ready to move. And so I typically look for candlestick rejections, which is like the most common thing that I'll use. But when I see something like this, like a rejection, a hard rejection like that, and even if I don't see this very fast rejection, I like to see an engulfing candle right afterwards, right? Or some people might see this as a change in state of delivery because of the count of all the candles that it's engulfing, and you know that will turn this into like an order block or whatever. So I'll use something like this, and then I'll put my stop loss either on the, depending on how big the rejection was, will depend how far out I'll put my stop loss. So I might put my stop loss here or up here, depending on how safe I want to be. I might go for like a quick 1-to-1, right? And then move my stop loss to break even. If I move it, I don't really move my stop loss that much. I like to keep it where it's at. But you know, I'll maybe do a 1-to-1, or I might do like a 1-to-2 or 1-to-5. So something like this, you know, nothing crazy. But ultimately, to figure out what really works best for you would be to back test. Okay, back test. Take a look at the video I sent you. There's a bunch of different entry methods that I use, and you can pair them up with whatever strategy you're trying to do. Some people like limit orders, but some people like candlestick rejections, right? Each method, and depending on how you're structuring your strategy, will greatly change your win rate. So there really isn't a one size fits all.
some people say the best entry method is to use limit orders. Listen, they all have their pros and cons, but the truth is neither one is going to give you the desired win rate you want. Sometimes it gives you a lower win rate, but you're still making money. Sometimes it gives you a higher win rate, but you're sacrificing something, whether it's taking less trades during the week or during the month. I mean, that's why you see a lot of people, like, I forgot what this one ICT trader's name is, but he's got like I think a 60% win rate, which is really freaking good, right? But his entry criteria is so technical and so specific, and the way he has his whole trading strategy set up in general, he only takes like one trade throughout the week. One trade, if that. And there's some, like my first student that I taught, he trades on the seconds time frame, and I think he has like a 50% win rate, and he uses like candlestick rejections, and he even got funded on with a futures platform. So it really just depends on you. So don't let anyone make you think that you need a certain entry method. It just depends on your back testing data and, you know, how you see the market moving with it. So yeah, that's how I would see it. I hope that answers that part. But yeah, let me know if you have anything else. I got all the time in the world, so take your time, bro. In your experience, what do you like to see to consider a setup A+? Okay, so again, most of the stuff I give you is very subjective. Everything in trading is subjective. So what I might consider A+, someone else is going to consider A+. Honestly, I'll give you what I would consider. It just depends on what I'm trading again. So for some people, an A+ setup, depending on their strategy, if it's part of their checklist, some people might say, according to my trading strategy and my backtesting data, an A+ setup would be like a reaction from an order block, liquidity, and an area of discounted premium, right? So something like this, right? Now, I will say this. What I think makes most setups A+ is to at least have 3 confluences. At least 3 confluences. I think that typically gives you the best statistical edge, and also gives you like enough trading opportunities. So one best confluence is to trade during a time where price is in a premium or in a discount, just depending on the type of trend. So like in your USD, we're in a bearish trend, right? So what I want to see is price go into an area of discount. Okay, perfect. And then what else do I want to see? I want to see price maybe sweep some liquidity, which, by the way, you don't need to always have liquidity to have an A+ setup or to have a setup in general. It's just a criteria that most people use that's very common, but you don't really need it. But in this example, we're just going to say we need some liquidity, so that's 2. So let's say, okay, so 1 is price needs to be in an area of discount / premium, and I'm gonna change this to like a white. Okay, so yeah, so that's 1, and then 2, let's just say for this example, needs to sweep liquidity, and then 3 would be taps into order block, which is what a lot of supply and demand traders, this is how a lot of them trade, really. Okay, so that's just 3 confluences right there. And what do we have here? You'll most of the time see this type of confluence in most trading setups, regardless of whether you're trading ICT, SMC, anything, right? And what you see here, discount, order block, liquidity. What does price do? Come up, sweeps the liquidity, taps into it, taps into the order block. We're in an area again of premium, and what does price do? Goes down, and then eventually ends up hitting TP. So yeah, there you go. That is one way to do it. Like I said, it just all depends on your trading strategy. And if in your trading strategy you've noticed, okay, I've noticed that I've had the best likelihood of winning a trade if I see these types of confluences, and that gives me like a 70% chance of winning that trade. Okay, those specific types of trades. And then as you're trading on and on, you'll say, okay, I've noticed that when I have only these like 2 or 4 whatever types of confluences, I've noticed that I have a 60% chance of winning those trades. And then the more you're back testing, you'll say, okay, when I notice I only have maybe these 2 types of confluences, I have a 30% chance of winning a trade, right? It just all depends on what you're using to structure your trading plan, like how you look for your bias, how you look for your entry methods, what points of interest you like to use, how you combine them, whether you're using like a weekly bias or not, the asset you're trading, the time window or the time frame, like a lot of these things, right? And so all of that will compose at the end of the day whether you have an A+ setup for you and your strategy, or a B setup or a C setup, stuff like that. And you can get a good idea of what I'm talking about when if you look at my swing trading strategy video, which is one that I've used. Like, you can see how I consider what is an A+ setup for that strategy, or what I consider to be a B setup for that strategy. You see what I mean? Like, does that sort of explain it? Do you have any other questions? Okay, I got you. Yeah. So yeah, like I don't know if you got anything else, something you want me to talk about, maybe a video you've seen on mine, I don't know, something. Sorry, my mic was muted. Okay, so it says, do you have any tips regarding the backtesting part? I'm planning to start intensively backtesting in the next couple of days. Have you seen my 300 trade, the science behind the 300 trades video? No, is that a new one? Yeah, it's a little new one. Let me send it to you. That one, I think I accidentally like messed up the premiere on it, and so a lot of people didn't get to see it or see that I released it. So maybe that's why you probably haven't seen it. That, or it just didn't get pushed through the algorithm. Oh crap. Oh, never mind. Okay, so I actually recommend you watch this because it gives reasons as to why you should backtest. I do want to make a video at some point on how to backtest, what to look for. The problem is, it's just so much stuff that you should look for when backtesting that it's really difficult. But what are you? Well, let me ask you this: are you a scalper or a swing trader? What kind of style do you like trading, and what assets do you like trading? So you swing trade, and for now I'm gonna stay on USD and GBP. Okay, perfect. So this is what I will always recommend anyone to do, because I already have a swing trading strategy, obviously, and I also have a scalping strategy, or a couple of them. What I will recommend any new person that's watching my content to practice backtesting the stuff I already made. Reason being is because there's already a clear set of rules, so you don't have to make up the rules as you go or try to test the rules, try to see what fits best, what doesn't. It just takes a lot of the headache that it comes with developing a trading strategy while you're backtesting. So the best thing that I would recommend you to do is just backtest my swing trading strategy. Watch the entire video in depth. If you already watched it, I recommend you watching it again, and take notes if you have to. You can always download the PDF. I don't know if you know, but like on all my videos, I make all my presentations available to be downloaded, so you guys can keep them. And just go through the whole thing, backtest it, do 300 trades. I mean, watch the video. I really do recommend you watching the video, because there really is a science behind this. And take your time with it. Try to get as many A+ setups as you can, B+ setups if you want, and just go through it. And reason being is because you want to get into a pattern of being a consistent backtester, because it really does become, how should I say it, discouraging when you're backtesting a trading strategy that you're trying to make, and you're seeing like 15 setups that are not going in your favor. And it happens a lot. Okay, it happens a lot. You'll get 15, 20 setups that don't work, and then people quit. But if they just would have finished out the 300 trades, they would have realized that it was actually a good strategy. You were just having like a bad month, or a bad couple of trades, or maybe a bad week, right? Something like that. And so another thing too, people don't realize this, but the way backtesting softwares do it, at least from what I've noticed, is they'll give you your average win rate adding up all of your trades, when instead they should be giving it to you on a per month basis, the average of your trading strategy per month. So 1 month you might have a 40% win rate. The next month you might have a 50% win rate, and then the next month it might even be like a 60, and then sometimes a 50, and then sometimes a 40. And then what they should be doing is giving you an average of that, because the way we measure
how much profit we make and how well it is, even on prop firms, it's based off of percentage per month. So it should matter how much a month you are statistically profitable in your trading strategy. And so sometimes with the trading softwares is they give you an average of all of your trades, not monthly. They don't like, it doesn't average the monthly averages. It just adds them all up and says, okay, in total you have a 40% win rate, when in reality you probably have like a 50 or a 60% win rate, which is what my first student has. He has like a 50 to 60, but on his backtesting software on FX Replay, it says 40 on there, but his prop firm says 60. So that's why I'm like, okay, people need to realize that this trading strategy is not as bad as it seems. Okay, it's actually a lot better once you do it on an average month to month basis. So yeah, just trade my strategy, swing trade that. The rules are already there for you, and just stick to it, because it does become mentally taxing. 300 trades does become mentally taxing because you're not used to it at first, but after a while you really get into a groove of it, and then you make like 100 backtesting trades like it's nothing after some point, and you're just like, okay, I'm used to making 300. 100 is nothing, right? So I would really recommend you do that. But is there something you want me to touch up on in the backtesting stuff? Like something else that I maybe haven't said or talked about? I get you. I'm gonna watch the video after this. Okay, cool. Is there something else you want me to clear up, or anything else you got in mind? Maybe videos, I just thought I could get some clarification, maybe learn some from other. Okay, let's see. I have a few more questions that need to be answered, but do you... Oh, hey, Mark, what's going on? I didn't even notice you were in here, man. When did you get in here? I don't know if Mark can hear me. Can you hear me, Mark? Oh, yeah, he's typing. Like that. Oh, bet. Can you... Okay, cool. And Mark, do you have any questions that you want me to answer, or do you want to hop on the mic and also do a 1v1 there? That's kind of what I've been doing this whole time, but go through the chat mainly. I'm on the road going home watching the stream using mobile data. Okay. Is there any questions you want me to answer, Mark, that you might have? For now, I think I am good, just trying to get to know better. Okay. Let's see. By the way, Mark, I'm gonna upload this probably on maybe on YouTube, so everyone will be able to look at this. Adapting to market conditions. Okay, so I got... How much time do you guys have? I might just do one more question. I might save these for another time. We might do this again. But yeah, do you guys have enough time, or free? Yeah, we could. I'm gonna get there in a little minute. Okay, so I'm gonna do one more. Let's see which one's the best. Let's see. Dang, these are actually good questions. Dang, man, it's hard to choose which one. Man. Okay, I guess this one was pertaining to demo trading. So, should you demo trade a year's worth of data or trade in real time for a year? That's a pretty good question. Okay, so how should I give my response for this one? I would say both. Honestly, trade both. Trade a year's worth of data and real time for a year, because the best thing to do is to get your mental in check, because you'll learn a lot of stuff about your strategy, and maybe even my own, maybe ways to refine it. And by then, once you do start trading, like with a prop firm account or with live funded accounts, like your own personal money, you'll realize just how much expertise you truly have, so you can rely on your analysis a lot more, because you've already dedicated a ton of time practicing, learning how the markets move, and getting all that ingrained subconsciously in your head. And then from there, once you enter a trade, you'll have a more easier time of letting it play out, as opposed to being scared and trying to close out earlier, leaving that money on the table, or even closing out in a negative. It's better to know that your stop loss got hit because of your trading plan, and it's better to also know that your take profit was hit because of your trading plan. So it's always better to do both. If you're going to only demo trade, at least do the 300 back tested trades. But I will always recommend to be safe about this, especially when it comes to trading, because at the end of the day, we're putting our personal money in the market, whether it's through buying a prop firm challenge or your own money. So it's just better overall as a trader to just get that experience under your belt and then trade live markets, whether it's prop firms or your own money. But just, if you can, do both. If you can, preferably do both. Now, with that being said, before I end this little stream, do you guys have any other questions for me? Anything that you want to know? I mean, it can be literally anything you want. Okay, so I actually do get this asked quite often. So I've been trading for, I believe it's been 4 years now. I know for sure it's been at least 3, but I can't remember if it's 3 or 4. I think it's been, damn, I can't remember exactly. I gotta check the date. I have the date written down on my phone. But yeah, it's been like around 3 to 4 years. And when it came to starting seeing some profitability, it honestly took me around maybe 6 months to a year. But that's the only reason why it took me so long, is because I was spending so much time trying to trade with indicators, because that was like my introduction to it in a sense. So if I would have, and it was really hard, man. It was super hard to get like the switch from indicators to just pure price action. But when I just hit that brick wall, I said, man, I really need to do something to change this, because this is not looking good. So when I finally made the switch, that's when I started seeing even more profitability and just more money. And so I thought, you know what, I'm just gonna stick to this. But I honestly, and I know this for a fact, I could have cut the learning curve by like freaking 80% if I would have had the videos that I have now, like on my channel, because everything that I'm teaching is everything that I struggled with, and I wish somebody would have told me. Like my first student, he literally became a funded prop trader, went from 0 experience to being a funded prop trader in like, I think it was 2.5 months. 2.5 months. And all he did the exact same thing I did. Worked, back tested, and ate. He would work, eat, and back test. That's all he would do, right? And because he dedicated so many hours to mastering the charts, is the reason why he was also able to cut his learning curve so small. So the more time you dedicate to this, the more time you'll cut off from being an unprofitable trader to being that profitable trader. So for some people, it also takes longer than a year. Some people, it takes 10 years. I've seen people try to learn how to trade after, I think, like 15 years. You know, this is just the stories I've heard. I don't know why it took someone that long, or why it would take anyone that long, but it can happen. But at the end of the day, it's worth it. But hopefully my content will cut all those learning curves by 90%. But it's up to you guys. It's up to how much time you dedicate to it, man. You guys have to really dedicate a lot of the time to it and not be discouraged, because it is worth it. The financial freedom you get from it is amazing. You can help a lot of other people too, which is what really I enjoy, is the reason why I do it. I just love getting those, like when Mark will upload like his feedback on the chat. I love seeing that. I love seeing how he's developing as a trader, and for me that really is a big motivation. And it's like, it's worth it. It's worth all the tremendous amount of hours that I put into making content. Like, even though it's like super simple stuff that you guys are seeing, it takes a lot, because I'm also adding stuff that I wish I would have known as well. Stuff that even till today I didn't even know of, and that I've implemented it into some of my new strategies that I'm coming out with, my technical analysis, like a lot of stuff. And so it's been a really interesting journey. But yeah, I love what I do, and that's what I hope, you know, for you guys. Probably strategy and mentor hopping make it much longer for them. Yeah, that's another thing too, man. Strategy hopping, I also have a video on strategy hopping too. I don't know if you've seen it, but if you know someone that's strategy hopping, you need to send them that video. And mentor hopping too. That's also another thing that I think also is another reason why I think it took me a long time, because strategy hopping was one of those things as well, and mentor hopping. I spent so much money buying courses from different mentors, and oh my gosh, dude, it's just each mentor. Here's the biggest problem that I've seen with mentors. It isn't so much that their trading content doesn't work. I mean, even though some of their content or some of the mentors out here really are just teaching trash, but I think it's more that they all tell you this is the best, absolute best and only way to trade, right? Sometimes they'll say this is the best trading strategy you'll ever find, or this is the only way to trade, or this is the only way to look at the market, or to mark up your charts, or to do this, that, and the other. And when I started seeing people claim profitability from another mentor, I said, oh, maybe I need to go with that one because I'm probably missing something out. And then he'll say the complete opposite of what the first mentor said, right? Maybe he said, don't trade like this, and then the other guy's trading the exact same way he claimed not to trade. And so that's the same cycle I kept repeating, and then I realized, man, trading is subjective. You can make money with all of these strategies. You don't need to just have one strategy in particular, or one method to be taught a certain way. It all works. It's just how you structure it in your trading plan. And when that for me was my aha moment. And so when I finally started learning everything that everybody taught when it came to price action, basic market structure, fair value gaps, I tried learning a lot from almost every YouTuber out here and every paid mentorship that I could find. I put it all basically together and said, okay, this is what truly does seem to work best, and this is what doesn't. This is useful information, this is useless information. And that's how I made my trading strategies. That's how I've learned how to trade markets. And yeah, it seems to work pretty well. So, I guess that just comes with the experience too. After all those courses you bought, what led you to give this info for free? This is gold. Appreciate that, man. Appreciate it. Well, I think mainly my Christian ethics. I'm a Christian Orthodox, and I have certain duties and virtues that I need to do, even though I'm not the best Christian out there. But I do have some that I really do need to stick with. And another thing is I identify with the struggles. People that struggle trading, paying for courses, and that don't even have the money to pay for those courses. It's, how should I say, it's really heartbreaking to see people try. Like people that live in Africa, which I've seen as a lot of people. I've noticed as a lot of people. A lot of the times those people are really good people, man, and they scrape up any penny they can find and they buy a course, and the course is not what they expected, or the Discord isn't what they expected, or they don't even get that one-on-one that was sort of promised by the mentor they were looking for. And so they're like, damn, I really done wasted all this money. It's not even what it meant to be. I could have found the same information on YouTube, and I literally just gave my money away. And so that was kind of one of those things that I also struggled with, because at the time I was living off of my credit cards. I was paying everything with my credit cards, all the mentorships, all that stuff. And so as a Christian and as someone that identifies with these struggles, I always told myself and the creator that I serve that if I ever did become a profitable trader, I would do my very best to give out this kind of content, this kind of information to people that they can one day look back at and say, because of those videos, that basically saved my financial life, And I get a really, really big high out of seeing positive feedback. So maybe that's also another problem. I'm a little egotistic in that sense, but I love it. I love seeing people profit off of the stuff I give out. It's amazing. The odds of me being in this group are 0 to none, because I went to Reddit and someone recommended you. It had one upvote. I may lack money to pay you now, but may God bless you. Hey man, appreciate it, man. Yeah, I have seen some people recommend this stuff on Reddit, surprisingly. But yeah, really, yeah, those are really small odds. Now that you say that, the odds of me being 0 to 0, wow, that's crazy. It only had one upvote, man. Dude, that's awesome. I can't believe it. I can't believe you actually found it like that. I'm gonna have to start hopping on Reddit more then. Although I did try recommending my channel on some groups, but they kept kicking me out because I wasn't allowed to promote free content. I get it, but I mean, at least I'm not charging people for it. Jesus. All those pairs on your watch list, you use the same model. It's more, I would view it like this. All the pairs on my watch list can be applied to various models. So like on my supply and demand models, I have very specific pairs that I tell people to trade those models with, and then I have other strategies that I'm developing that I trade them with other models. So like I might have let me see here, so like I have maybe GBP JPY, I might trade that with something else, or I might trade that with maybe some kind of swing trading strategy, and at the same time I'll go to a different time frame and trade it with some kind of scalping strategy, right? So, because there's many ways to trade an asset. You don't have to just trade it one specific way. It's just each asset here. I think most of them are just for my swing trading model, but sometimes I'm trying to refine another trading strategy that I'm making to where I could scalp it or swing trade it, and you know, just use a different time frame. I'll use like AUD NZD and try something else, you know, so on and so forth. But if I give a trading model and I tell you, hey, trade it with these specific pairs, I usually do the same thing. I try not to deviate from those pairs. I try to just stick with those same pairs because of all the extensive back testing I've done, and just some assets don't work very well with some models. So yeah. One day, can you drop a video of how you took a trade using the swing trading model? Yeah. Do you want like a live trade of it and like a recap? A recap. Okay. Yeah, I can do that actually. I can do that. I'll write it down. Let me see. I'll write it down. Let's see a recap of the swing trading model. I'll probably add a little snippet of like a live of it being live before it enters the trade and after it's entering the trade. Let me see if I can find my recap trade using swing model. Okay. Yeah, I wrote that down. Yeah, I'll do a recap at some point. I'll try getting it done. I can't make any promises, to be honest. I'll say like in a week, but even then I'll probably end up like pushing it down further. I have like a lot of stuff I got going on, but I'll try my best, man. I try my best. I'm pretty sure people would like to see that anyways, so that's actually a good idea. I'll probably try doing that as soon as I can. But yeah, guys, any other questions, anything else before I head out? Hopefully I'll do something like this again soon.
Oh yeah, man, time flies.
I have no further questions. Only that, may God bless and protect you. Thank you, Mark. I really appreciate it, man. Keep praying for me, y'all. Hopefully there's more and more amazing content for you guys. I think I'm gonna drop a link. I don't know if I already dropped it in here, but I'll probably drop a link somewhere to where you guys can also put in like requests for different videos that you'd like to see. So yeah, but other than that, man, I appreciate the blessings, man. May God protect you guys as well, anyone else watching this video. And I hope that this was useful for someone. I hope that a lot of you guys got your questions cleared up. And if you have any more questions, as always, just let me know in the Discord. I'll try to answer or get back to you guys and be extensive if I can. But other than that, that's all I have for y'all. Y'all take it easy, man. Enjoy y'all's weekend. Stay blessed and be careful out there, all right?